Guys, how we doing? I'm Ryan Mack. Welcome back to Trading Guys. Today we're going to go through the fundamental analysis for strong, weak and neutral economies. I'll also, where are we, take you through PMT, Prime Market Terminal. I haven't looked at it yet. I've literally turned on my computer 2 seconds ago. And we'll potentially have a look at technical analysis, but I need to see how long this takes because I'm really fucking busy today. I've got loads to do. I'm preparing. So for those of you who don't know, I also do like expeditions around Indonesia and around other parts of the world. And I've been building some incredible expeditions for next year, which is going around the mountains of Kyrgyzstan on horseback. So I'm going to do a cool collaboration here to build up that documentary story for next year. So I'm going to be collaborating with like one of the top horse riding schools here. And so we're going to document the story for me, like starting horse riding. I can actually already horse ride at a beginner level. But we're going to do it as if I'm starting from the very beginning all the way through to being able to ride a horse only using my legs while firing a bow and arrow, so that by the time I get to Kyrgyzstan, I'll be able to go into like the competitions with the locals and see what we can do, you know, just to make some really fucking cool content. But the crazy thing is, like, people don't realize how much effort goes into content, right? They think if you go away to a different country or a different location, you've literally just rocked up there and you just record it. There's so much work that goes in beforehand, the preparation. Even if it's a jungle trek, there's a lot of preparation before it. So, yeah, I'm looking forward to it. Our expeditions for this year and even next year are almost full. We've only got a couple of slots left for, like, I've got next year I've got the father and son jungle expedition. So I'm taking like fathers and sons through the jungle for a 5-day jungle trek. We're going to be camping at like blue lagoons in the middle of the jungle and swimming and going out during the night and looking for wild animals. It's just going to be fucking amazing, lads. So I'm busy today because I have the first meeting with the woman who's going to be teaching me how to ride the horse and shoot the bow and arrow at the same time and all that. So it's pretty fucking exciting. Anyway, let's crack on. So as you know, I always do one currency pair or economy, whatever you want to say, on its own, apart from AUD, China, and NZD, okay? Because they're all closely correlated. So let's have a look at last week. To fix this. Why is CHF in there? Oh, that should be China, sorry. Right. What date are we on? 13th, okay. So, bearish, bullish, 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 bullish. Now, don't be put off that that's red, okay? It's went from 52 down to 50. Now, yes, things are getting weaker, but as long as it remains above 50, that is still bullish, okay? So bear that in mind. Commodity prices, bullish, bullish, bullish. So that's from the previous week. That would see AUD in a bullish momentum. Bullish, bearish, bearish, bullish, bearish, bearish. Sorry, bullish. Stagnant. Sorry, no, it's neither or. Into the bullish, bearish, bullish. Okay. And if I have a look here at central bank rates, now central bank rates, you see it here, right? This is quite important. In fact, what I'm going to do is I'm going to zoom in because I keep forgetting that your screens will look tiny because I've got a huge screen. There we go. Right, so if you look across here, right, at central bank rates, you'll see AUD 410, GBP 375, Euro 215, right? So, when you hear people talking about money flows, it means money flowing from one economy to another economy, or you could say from one currency into another currency, right? Now, in this example, euro is kind of neutral to weak bullish and neutral and then to weak bearish and stuff, right? It's kind of humming and hawing. It's in between. Whereas just now we're seeing quite a lot of strength in the AUD. Now, as well as China doing quite well and AUD getting some strength from that, what we also have to take into consideration here is central bank rates, which has a huge effect on money flows, and I'll explain. So what is a central bank rate? That's essentially the rate of inflation, right? You always hear people talking about the rate of inflation. So this doesn't say here the rate of inflation, it says central bank rates. And sometimes people don't realize that that's the same thing. So what does this mean to you and I, and how can it help us with trading? So if the euro is at 215, right, and all the data from the euro side is coming in a bit shitty, manufacturing's below 50, services below 50, unemployment is up, employment is down, and blah, blah, blah. And then also central bank rates here are not too good. Then you will see when AUD is doing well and central bank rates are up and so on, that money will flow from the likes of the Eurozone to the AUD. Now, why is that? These rates here are essentially the amount of interest that the central bank of each country is telling you that you're going to get. So what I mean is, if you invest your money in the Eurozone, right, and I'm talking about people that are buying government bonds, okay, and likes of hundreds of millions and billions, okay, the Eurozone is saying if you invest your money into the Eurozone, i.e. by buying Euro bonds, we will give you 2.15% per year interest. So it's like, well, why would I do that? Because your economy is pretty poor. It's like, man, this is down, that's down, average earnings, blah, blah, blah. Everything, the data-wise is not very good, and you're going to give me 215% a year if I buy your bonds. If I look at the AUD, China's doing well, AUD is doing well, blah, 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 and so on and so forth. Employment is up, unemployment is down, and I'm just making this up, of course, right, to give you the example. If all of this is going up and it's going well, and I take my money out of the Eurozone and I invest it in Australia, Australia is going to give me 4.10% a year. So why the fuck would I keep my money in the Eurozone when I can put it in Australia, which is one, doing better than the Eurozone, and two, you're going to give me more money, you know? So that's why people then buy bonds, and that's where the money flows from the euro into the likes of AUD. Now, the next question is, what has that got to do with fucking Forex? How does that make the AUD strong and euro weak and so on? Well, it's because whenever someone wants to buy government bonds, i.e. invest in an economy, which is you do so by buying bonds, you must purchase it in the currency of the country that you wish to purchase the bonds. So if you want to sell if you want to sell euro bonds, you're going to sell it and you're going to be left with a bunch of euros. If you want to then buy AUD bonds, Australian government bonds, to invest in the Aussie economy, you can't purchase that with euros. You need to convert your euros into Aussie dollar and then use that Aussie dollar to purchase the bonds. So because everyone's, selling all their euro, it creates a huge supply of euro and a small demand for euro. So then it gets weaker, right? Because everyone's trying to convert their euros into AUD in this example, it creates a huge demand for AUD and a smaller supply because everyone's fucking taking all the Aussie dollar, right? So that then makes AUD strong. It gives it this strength because everyone's trying to get their hands on AUD. So that's why in Forex we also care about central bank rates, okay? Let's have a look. Excuse me. This week coming up, if we get any big news, trade balance, new loans, employment, unemployment, we want to see that. Employment. We've got a bit of news we want to see. Not loads, but we've got a fair bit of news we want to see. Retail sales, unemployment rate, and so on and so forth. So I'm going to keep NZD as weak, okay? AUD is potentially potentially neutral to weak bullish, right? It is quite bullish. Let's have a look. Bullish, yeah. I'm going to keep it neutral, right? However, I'm going to keep in my mind that I see it as potentially neutral to weak bullish, okay? Later on, we're going to have a look at prime market terminal and see what they say. But remember, sometimes I'm saying something's bullish, right? And I'm going to show you this in a second because I'm talking about the long term. They might say something is bearish because we're talking about right now. Okay, it's all to do with market cycles. Wait, I'll show you this, right? So look at this. Markets go in cycles like this, right? And then it goes bang, 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 and then it'll start again, right? So when it comes to things like prime market terminal, I'll be saying, oh yeah, let's just say AUD is strong. Nah, you for real? So I'll be saying it's strong because I'm talking about this. I'm talking about, fuck my life. Every single time I go to do a live, I say, everybody, guys, I'm going to do a live. Can we please remember and shut the fuck up? And that's when they're the noisiest. See, before I do the live, nobody makes a fucking sound. Nobody says anything. It's only when I go to make the live, they're like, yeah, bring your kids. Yeah, your kids screaming, that's even better. Fucking bring it in. And let's fuck up his live. So when I'm back to where we were, when I'm talking about something as strong and bullish, I'm talking about the bigger picture. Now, this could be over a couple of months, 3 months, 1 month, 3 months, 6 months, and so on, right? So if I'm saying, right, AUD's potentially switching bullish, I'm talking about the bigger picture. When prime market terminal, maybe at the same time, says something is bearish, they're talking about this. They're talking about the here and now. So that's just the pullback, whereas I'm talking about the overall thing. So none of us are wrong. It's just that they're talking about the here and now, which part of the cycle it's in, and I'm talking about the whole cycle. So because I'm swing trading and they're set up for trading today, they're talking about, right, this week you'll be looking to take shorts. Whereas because I'm a swing long-term position holder trader, I won't be taking this sell. I'll be waiting for the market to come back down here. Then I'll be entering the trade here, and then I'll be taking it up for the whole long-term trade, right, for weeks or months on end. You know, that's essentially what we're looking at, okay? So that's the difference, guys. That's why you get that difference in opinion, but it doesn't mean one's right and one's wrong. It's just the context has changed, right? So I've got NZD as weak. Obviously, we don't mark down China. Neutral, AUD. But I've got it in my mind that it's potentially weak bullish, okay? Moving on. This is going to get a little bit faster now because we just do one economy, one currency pair. Let's have a look. CAD, bearish, bullish. It is getting weaker, but bullish and bearish, okay? CAD's shit. Remember, CAD gets strength when oil goes strong. CAD gets its strength, okay? But overall, the economy is shite. That's now went massively dropped from 56.6, which is extremely bullish. That is extremely bearish, that massive drop, and it's below 50. Employment change. Employment has increased, so that's bullish, and unemployment has remained the same, okay? So not much change there. I'm keeping CAD in weak, okay? You just need to remember, CAD is weak because the economy is totally fucked. It's shit. However, if you see CAD flying this week and it's beating stronger pairs, I guarantee you, if you look at oil, it will be because the oil price is flying, okay? So it's a false strength, all right? It's not real strong economy. And you can still trade that. If oil starts flying, you can quickly jump across to a Canadian pair and you can buy CAD against whatever other one it is. You can do that, absolutely. This week, we don't really have a lot of news that we care about this week, so it's quite a basic week. Moving on, CHF. We never cover CHF because it's always the same, like, really shit data. It's always in neutral. because CHF is traded based on risk on, risk off sentiment. Okay, let's have a look what we had 2 weeks ago. This is going back 2 weeks, right? Because I want to check it. Bullish, bearish, 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 bullish, bullish, bearish, bullish. Don't be confused that it's red. That's bullish. Bearish, bearish, bullish, 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 bullish. Bearish, sorry. Bearish, bearish, and bearish. Okay, let's see what last week was. Bullish, bullish, bearish, bearish, bullish, bullish. Bullish, bearish, 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 bullish. So bonds have increased. Bonds have went up. And currency goes up after bonds, okay? It's after the bond yields, so it's important to remember that. If bonds start going up, the currency will go up after that, okay? Precisely because of what I told you. To purchase bonds, you need to purchase it in the currency of that. If it's the euro, then it's not just the country, right? It's the whole economy, the eurozone. But if it's pound and blah, 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 Japanese yen, whatever, if the bonds are going up, later on, a week later, a couple of days later, or up to a week, the currency will get strengthened. It's because there's a high demand for that currency, and the supply is getting smaller, so it will give it that strength, right? It will follow later. So if you keep an eye on bonds here, US bonds, they've massively jumped up. German bonds, British bonds. If you keep an eye on the bonds, if the bonds are going up, the currency will also go up, okay? So it's a nice little trick to remember. A nice little golden nugget. Yeah, we've covered that. Let's see what we've got this week. Yeah, we've got a fair bit of news. Final core CPI year on year. Yep, we want to see that. That's good. Current account, trade balance. Yeah, so there's a fair bit of news we want to see this week. I am going to keep it in. I'm going to put it in neutral, okay? Because I've got a feeling that the eurozone could be swinging to the downside. So coming out with a strong into neutral, going into a kind of weak bearish, right? Now moving on. We've only got a couple of pairs left, guys. Let's go back. Let's go back 1 week. What's this? What pair is this? Oh, pound. Bullish. Things are getting worse, but it's still bullish because it's above 50. Bullish, bearish, bearish. I know it's increased, but it's still below 50, so it's bearish. Bearish and bearish, okay? This week, GDP month on month, goods trades balance, construction output, industrial production, manufacturing production. There's not loads. We'll keep an eye on it, but there's not loads. I'm gonna keep pound in neutral. But if you're a kind of scalp trader / day trader, it might be kind of neutral to weak bearish. Okay, that kind of range. Just remember it in your mind, or you can make a note of it if you want. Right, Japanese yen. It's already weak. I already know that. Bearish. Bullish, 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 bearish, 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 bullish, bullish, bullish. Okay, so mixed data, but It's not enough to pull the economy out of being shit. Bullish. Core machinery orders. I mean, we don't really have much news that we care about. I'm going to keep Japanese yen in weak. You could potentially move it to neutral if you wanted, but I'm just not yet. Still, it hasn't done enough for me to see it. Now we're on the last pair, USD. Now look, that's dropped. Don't be put off that it's red. It's still above 50, so it's bullish. Just means things are slowing down a little, but it's still above 50. Bullish, 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 bearish, bearish, bullish. Don't be fooled that it's red. It's increased from 7.7 to 9.5, so it's bullish. It just didn't come in at 10, what they thought it was going to be. Bullish. Sticky, month on month. Sticky is still strong. It's not gotten worse. Bearish. 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 Bullish. Bearish. Bullish. Bullish. Sticky. Bullish, bullish, bearish, bullish, bullish, bullish. Okay, so USD is quite strong. Let's see what we've got this week. We want to see core PPI. Empire State Manufacturing, import prices, unemployment claims. There's not a huge amount of news. This is a pretty boring news week, which is kind of good. I'll keep USD in strong for now. And that's it. So overall, this week, I've got strong, only USD. That's strong USD. Weak, I've got NZD. CAD, Japanese yen, that's weak. NZD, CAD, Japanese yen. Neutral, AUD, CHF, Euro, GBP. That's neutral, AUD, CHF, Euro, GBP. Now, again, AUD could potentially be seen as weak bullish to bullish, right? CHF, nah, still, it's always neutral. Euro, I think, is going to be around neutral to weak bearish, and then GBP might be neutral to weak bullish, right? Now, I haven't seen this yet. Let's have a look. Let's see what we've got. Let's just close this down. Okay. USD, weak bearish this week. Euro, weak bullish. GBP, weak bullish. CAD, bearish. Yeah, weak bearish. AUD, weak bullish. Yep, I literally just said that. NZD, weak bullish. Again, I wouldn't take it as that, but like I said, in the intraday, yes, that's fine. Japanese yen, bearish, and CHF, neutral. That is pretty much in alignment, right? Like these ones here, I've got them in neutral, but I'd literally said a second ago, it could be weak bullish, right? The only one that's different is they have got weak, USD is weak bearish. I honestly don't see that, but again, the intraday stuff, it very well could be. Let's have a look at the bias history. Let's move this out the bloody way. So USD is now just shifted from bullish to weak bearish. Okay, that's fine, because it's just going to be the pullback phase, right? Weak bullish, weak bullish, weak bearish, weak bullish, weak bullish, bearish, and neutral. So if you want to take a note of that, you also can. If you're a kind of intraday trader and you want to know what these are, that you could also note this as well, right? I'll show you again up here. There we go. So if you're an intraday trader, these guys have got USD as weak bearish, Euro is weak bullish, GBP is weak bullish, CAD weak bearish, AUD weak bullish, NZD weak bullish, Japanese yen bearish, and CHF neutral. Okay. Now let's have a quick look at currency pairs. I'll move this to the daily time frame. AUD CAD. Yeah, so it's just pulling back. I wouldn't touch anything there. AUD CHF, I wouldn't touch anything there. AUD NZD, you could potentially move this to here now. I'd say it could come here. Boom. And that could potentially bounce and go. AUD Japanese Yen, it is coming down. But yeah, I really need to see it retest this zone and go. I wouldn't be taking the sell, absolutely not. AUD USD, I wouldn't be taking that. Euro AUD, I mean, I wouldn't be touching that because both of them are potentially, look, Euro, weak bullish, AUD, weak bullish, right? So I wouldn't be taking it. You're just going to get a range. It's just going to go like this, bum, bum, bum. It's just a horrible, shitty range. Where you get the incline or decline is if one is weak and one is strong. You know, one is bearish and one is bullish. That's where you get this, right? When both of them are neutral or both of them are weak bearish or both of them are weak bullish, that's where you get this bullshit. The market doesn't move, right? You want one to be strong and one to be weak, which then gives you this, all right? Euro CHF, nah, nothing. If it comes back and retests here, I would buy it, but I won't be selling it. Shit. Look, totally shit. Nothing's happening here. Euro USD, shit. Look, it's just a big, massive, horrible range. There's nothing to take, you know? I'm very confident in looking at the charts and being like that. There's nothing I'm taking here. Fucking see you later. I'll come back next week, you know? I don't waste my life sitting in front of the screen every day. Like, oh, please be something today. If I look here and it's not in one of my zones that I've marked up, I don't care what the market does. I know I've got the rest of the day or potentially even the rest of the week off to, you know, to carry on and do whatever I want. I don't become a slave to the screen. Most people get into trading for that freedom, right? To make money and freedom. But if that freedom comes at a price of you moving from your job to sitting in front of your fucking screen for 6 hours a day, then you haven't got freedom, right? You're still fucking trapped. That's why I love swing trading. I love it. Look, let's just say you entered this, right? We already did it marked up. Let's say you entered this. Let's go to the weekly time frame to make the counting easy. Look, you enter this, let's say here or here, right? You've got, let's say it was here. 1, 2, 3, 4. 4 weeks you could have left that. You know, even longer if you wanted. But look, 4 weeks. So if you entered that trade, you don't need to care about that trade for an entire month, right? An entire month. You don't have to fucking care about it. You can just let it crack on, right? It's amazing. That's why I love swing trading. You're not sitting here every day like, oh, should I close it now? Look, there's nothing here. That's dog shit. There's nothing here. That's dog shit. There's nothing here that we were in this. We did take this. I think we closed it around here, and then it kind of pulled back and came to here. But there's nothing else I would be touching. USD CAD. I mean, you'd essentially be looking to buy this, but I just wouldn't be buying it yet. I'd want to see a better retest. Nothing here that I would touch. There's nothing here that I would touch. Look, it's just a shitty mess. And that's perfectly fine, guys. This happens. Oil is just bouncing around. Let's have a look at the H4. So I had it marked up for this time frame to come back and go, but it just went. You know, look at that fucking hell. Gold isn't really doing anything. Silver isn't really doing anything. Copper, no. So that's it. There's nothing here. So I already know, right, that pretty much this week I've got fuck all trades to take. Yes, each morning I will come back to the charts and I'll fly through it very quickly and see if we've got anything. But if we don't, I'll just be like, yeah, fucking see you later. I now know that I've pretty much got this entire week off, right? And that's it. It's just how the cookie crumbles. Be a sniper, not a machine gunner, okay? Guys, if you would like our full-blown mentorship, which is part of the Trading Guys right here, you can come along and join us. Okay, we've got full mentorship. We've got a full trading course from start to finish. That's just psychology stuff there. But look, I've got the full trading course here. I even took live trades while I was making this course. I took trades live in front of your face so you can see, you know, it's not bullshit. I do practice what we preach. I've got everything here for you, right? We've got scalp trading for beginners. If you want scalp trading, we also have scalp trading here. Trade reviews. We review every single trade that we take, right? Every single trade that we take, win or loss. Trading books, trading psychology, fundamentals, blah, 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 right? I manage trading accounts. We've got everything here. Okay, so yes, I don't take a lot of trades, but when I do, I give them here in the signals so you can copy the swing trades. Here in the trading chat, my business partner Lee, every single day he gives out scalp trades, at least 2 to 3 every single day scalps, so you can make money copying those trades as well. Okay, if you want to get involved in this full-blown mentorship, jump in the description below. We've got all the links there. If you want to also purchase Prime Market Terminal, I've got a link there as well down below, so you can get I think it's like a 15% discount. And yeah, thanks for watching. I'm Ryan Mack. This is the Trading Guys. Have a great week. Don't get FOMO. Manage your risk. Don't overtrade. Don't over risk. And have a great week. Take care.